Welcome to Markets Now. I'm Michelle Rook with Randy Martinson Ag. We're seeing red on the board except for the wheat market this morning. And Randy, certainly outside markets taking a risk-off tone here with attacks in Israel over the weekend. So just another war that we have to try to work through with more uncertainty to the market.
Yeah, that's the truth. I mean, right now we kind of knew what was going on as far as the Ukraine and the Russian war, and we knew what our involvement was going to be. Now with this new war breaking out with Israel and Hamas, that now it brings a whole new level of uncertainty and what our involvement's going to be, and that will play out here this week. It's certainly going to bring some uncertainty to the markets and continue to cause a little bit of back and forth trading. It's certainly pushing crude oil markets higher this morning, and I think it did have a little impact as far as the grains, but wheat performing well here yet. Hopefully that market can hold on.
Yeah, the other uncertainty we should point out before we talk about other things is the fact that we don't have a House Speaker. And so we need to get that done or some leadership in place pretty soon, don't we?
Well, most definitely, especially with the idea of another war breaking out and then our involvement. So it's going to take some congressional movement or some congressional bills to allow us to actually participate. So without a speaker in the House, that might be stalled for a little while. So that just extends the uncertainty of what's going to happen.
Yeah. So let's start off with wheat, since you mentioned that. We are higher this morning, unlike corn and soybeans, and we had a higher weekly close last week. So let's talk about kind of what's driving that market. Surprising to see it up, considering the dollar is up as well.
It is, but of course we had our first sale in 2 years to China last week, and that helped push the market last week. This week, there's rumors of more buying because of China's backing away from buying from Australia. Argentina still continuing to see some dry conditions, some drought issues. So all that I think is coming in to help support the wheat market. Now we do have that October crop production report, which likely isn't going to be friendly to wheat, but we already know what those numbers are, and I think the market's looking past that to the expectation of better demand.
Yeah. Obviously, it looks like maybe we finally gotten to a price level where we are starting to be competitive. So that's the good news for the wheat market. And wheat seems like it's been helping the corn market. But boy, let's talk about corn because, the chart looks very good there. We just need to take out the $5 mark, right?
Oh, most definitely. I mean, we've seen 3 weeks of decent closes. Last week, a stronger one, steady, firm the previous 2 weeks. So corn actually, with a 2 billion bushel ending stocks estimate, has performed very, very well as far as the charts are concerned. Now, it doesn't mean that we're going to see corn take off and trade sharply higher, but I do think that we probably have seen our harvest lows, and this market is going to build, I think, a pretty strong base right now.
Yeah. So like you said, 3 weeks up. Have we put the harvest low in, do you think? I mean, certainly it would be about the right time of the year for that, wouldn't it?
Yeah, seasonally, we normally do at that first week or first 10 days of October, put our harvest lows in for both corn and soybeans. So I think corn probably has. I mean, I look for that market to continue to trade fairly decent. We know we got a 2 billion bushel stocks. The report should be friendly on Thursday from what we saw from the quarterly grain stocks report. So I do think that maybe corn has seen its worst days.
Very good. And the other things I wanted to ask you about is, we do expect a friendly report because of the quarterly stocks pulling down the beginning stocks. But is the market also seeing maybe a little bit better demand to support the market? Or are we starting to think that yield might be lower? Which is it? Or is it both?
It might be a little combination of both. We're too early in the harvest right now to get a definite trend as far as where yield's going to be. But I know that there is some concerns about yields backing off. But I do think it's more on the demand side. There's rumors right now, of course, that Brazil is going to have to switch over and start moving some soybeans again. That's going to slow down their corn exports. And that means that China is going to have to find another supplier of their corn. And, Mexico has been a pretty aggressive buyer. So I think, looking forward, we've got some good chance to see some corn export sales going both to Mexico and to China.
Yeah. What about harvest pressure in soybeans? Will that continue to be a press on that market here this week?
I think it will be. I mean, that's one thing with corn. We're seeing that go to the bin. Of course, the soybeans are mostly going to the elevator, and I think that will continue to put some pressure in on soybeans. Stocks continue to be tight. It looks like we could see a negative report on Thursday, or at least negative numbers. So overall, the beans have a little bit of a struggle going forward. Right now, I do think that it's going to be harvest pressure and the lack of buying from China that's going to drive this market.
So let's talk about the charts because they don't look very good for soybeans right now. We've been down how many weeks in a row?
We've been down. I think we've been 6 weeks in a row. We've had negative closes in the soybean market. And yeah, the charts don't look good. I think that's a market that's got to go down and test that 12 and a half, probably even that, closer down to like 12.35 before we see a bottom in this market.
And at that point, will we start to see some export demand, Randy?
I think so. I mean, I think one thing is that, we've seen that Argentina is going to stop crushing because 2/3 of their plants are going to go idle because of the lack of soybeans. That means that Brazil's not shipping to Argentina. That tells us that there could be a possibility of some shorts of supplies there. And that's why I think they're going to start exporting or at least start shipping again, which will take away from the corn shipments. But it does open the door for us to possibly be able to get some sales into China in the October, November, December timeframe.
And the cattle market under pressure here this morning. I guess that's to be expected here with some of the risk off in the outside markets.
Yeah, I think so. I mean, we need to see a cash trade develop. Right now, I think the cattle have been, more tied to what's going on as far as the stock market than anything, mainly because of the expectation of a interest rate hike and because of the jobs reports out there. The cattle market, in 3 weeks down, I think there's still a little bit more pressure that could be coming in the cattle markets.
Okay. Funds have decreased their net long position. We'll see if they continue to liquidate or not. Hogs, we are down here this morning. I looked at the commitment of traders report. Funds have really exited a lot of their long positions in the hog market. So do you think we're going to stabilize here, or what's driving the market right now?
I think it's just an overall low, uncertainty as far as the economy, because even though the jobs report up, I think they're just worried about the consumer demand going forward. I think if we can get past the next couple of weeks and maybe, see what happens with the Fed, I think the hog market could stabilize a little quicker. The the quarterly hogs and pigs report showing that more hogs to be marketed, I think is also adding a little bit of pressure.
Yeah, that certainly didn't help. Plus, cutout and cash values have continued to kind of slide here, which we expect in October from a seasonal standpoint, don't we?
We do. I mean, yeah, we do see the demand start to slow down here a little bit. Now, hopefully, once we get supplies moved through that increase in supply, hopefully that means we can stabilize the prices by late fall, early winter.
Okay. Thanks for joining us, Randy Martinson with Martinson Ag. That is Markets Now.